Hello guys, welcome to the Pink Publisher. Today I'm going to talking about Bitcoin, and stay with us. If you are interested in this type of video, please help to subscribe to my channel. I have explained about cryptocurrency in my previous video, don't forget to watch that video, the link is mentioned in the description below. Okay, let's go to the video. What is Bitcoin? Bitcoin is a digital currency created in January 2009. It follows the idea set out in a white paper by the mysterious and pseudonymous Satoshi Nakamoto. The identity of the person, or persons who created the technology, is still a mystery. Bitcoin offers the promise of lower transaction fees than traditional online payment mechanisms, and, unlike government-issued currencies, it is operated by a decentralized authority. Bitcoin is a type of cryptocurrency. There is no physical Bitcoin. Only balances kept on a public ledger that everyone has transparent access to. All Bitcoin transactions are verified by a massive amount of computing power. Bitcoin is not issued or backed by any banks or governments, nor is an individual Bitcoin valuable as a commodity. Despite it not being legal tender in most parts of the world, Bitcoin is very popular and has triggered the launch of hundreds of other cryptocurrencies, collectively referred to as altcoins. Bitcoin is commonly abbreviated as BTC. Let's understand Bitcoin. The Bitcoin system is a collection of computers, also referred to as nodes or miners, that all run Bitcoin's code and store its blockchain. Metaphorically, a blockchain can be thought of as a collection of blocks. In each block is a collection of transactions. Because all the computers running the blockchain have the same list of blocks and transactions, and can transparently see these new blocks being filled with new Bitcoin transactions, no one can cheat the system. Anyone, whether they run a Bitcoin node or not, can see these transactions occurring in real time. To achieve a nefarious act, a bad actor would need to operate 51% of the computing power that makes up Bitcoin. Bitcoin has around 10,000 nodes, as of June 2021, and this number is growing, making such an attack quite unlikely. But if an attack were to happen, Bitcoin miners, the people who take part in the Bitcoin network with their computers, would likely fork to a new blockchain, making the effort the bad actor put forth to achieve the attack a waste. Balances of Bitcoin tokens are kept using public and private keys, which are long strings of numbers and letters linked through the mathematical encryption algorithm that was used to create them. The public key, comparable to a bank account number, serves as the address published to the world and to which others may send Bitcoin. The private key, comparable to an ATM PIN, is meant to be a guarded secret and only used to authorize Bitcoin transmissions. Bitcoin keys should not be confused with a Bitcoin wallet, which is a physical or digital device that facilitates the trading of Bitcoin, and allows users to track ownership of coins. The term wallet is a bit misleading, as Bitcoin's decentralized nature means it is never stored in a wallet, but rather decentrally on a blockchain. Okay, now, I'll explain you the types of risks associated with Bitcoin investing. Bitcoin was not designed as a normal equity investment. No shares have been issued. Some speculative investors were drawn to the digital currency, after it appreciated rapidly in May 2011 and again in November 2013. Thus, many people purchase Bitcoin for its investment value rather than its ability to act as a medium of exchange. However, the lack of guaranteed value and its digital nature means that purchase and use of Bitcoin carries several inherent risks. Many investor alerts have been issued by the Securities and Exchange Commission, the Financial Industry Regulatory Authority, the Consumer Financial Protection Bureau, and other agencies. The concept of a virtual currency is still novel and, compared to traditional investments, Bitcoin doesn't have much of a long-term track record or history of credibility to back it. With its increasing popularity, Bitcoin is becoming less experimental every day. Still, after only a decade, all digital currencies remain in a development phase. It is pretty much the highest risk, highest return investment that you can possibly make, says Barry Silbert, CEO of Digital Currency Group, which builds and invests in Bitcoin and blockchain companies. Regulatory risk. Investing money into Bitcoin in any of its many guises is not for the risk-averse. Bitcoin is a rival to government currency and may be used for black market transactions, money laundering, illegal activities, or tax evasion. As a result, governments may seek to regulate, restrict, or ban the use and sale of Bitcoin, and some already have. Others are coming up with various rules. For example, in 2015, The New York State Department of Financial Services finalized regulations that would require companies dealing with the buy, sell, transfer, or storage of Bitcoin to record the identity of customers, have a compliance officer, and maintain capital reserves. Any transactions worth $10,000 or more will have to be recorded and reported. The lack of uniform regulations about Bitcoin and other virtual currencies raises questions over their longevity, liquidity, and universality. Security risk. Most individuals who own and use Bitcoin have not acquired their tokens through mining operations. Rather, they buy and sell Bitcoin and other digital currencies on any of the popular online markets, known as Bitcoin exchanges or cryptocurrency exchanges. Bitcoin exchanges are entirely digital and, as with any virtual system, are at risk from hackers, malware, and operational glitches. If a thief gains access to a Bitcoin owner's computer hard drive and steals their private encryption key, they could transfer the stolen Bitcoin to another account. Users can prevent this only if their Bitcoin is stored on a computer that is not connected to the internet, or else by choosing to use a paper wallet, printing out the Bitcoin private keys and addresses, and not keeping them on a computer at all. Hackers can also target Bitcoin exchanges, gaining access to thousands of accounts and digital wallets where Bitcoin is stored. One especially notorious hacking incident took place in 2014, when Mt. Gox, a Bitcoin exchange in Japan, was forced to close down after millions of dollars worth of Bitcoin was stolen. This is particularly problematic given that all Bitcoin transactions are permanent and irreversible. It's like dealing with cash. Any transaction carried out with Bitcoin can only be reversed if the person who has received them refunds them. There is no third party or a payment processor, as in the case of a debit or credit card, hence, no source of protection or appeal if there is a problem. Insurance risk. Some investments are insured through the Securities Investor Protection Corporation. Normal bank accounts are insured through the Federal Deposit Insurance Corporation up to a certain amount depending on the jurisdiction. Generally speaking, Bitcoin exchanges and Bitcoin accounts are not insured by any type of federal or government program. In 2019, prime dealer and trading platforms Fox announced it would be able to provide Bitcoin investors with FDIC insurance, but only for the portion of transactions involving cash. Fraud risk. While Bitcoin uses private key encryption to verify owners and register transactions, fraudsters and scammers may attempt to sell false Bitcoin. For instance, in July 2013, the SEC brought legal action against an operator of a Bitcoin-related Ponzi scheme. There have also been documented cases of Bitcoin price manipulation, another common form of fraud. Market risk. Like with any investment, Bitcoin values can fluctuate. Indeed, the value of the currency has seen wild swings in price over its short existence. Subject to high volume buying and selling on exchanges, it has a high sensitivity to any newsworthy events. According to the CFPB, the price of Bitcoin fell by 61% in a single day in 2013, while the one-day price drop record in 2014 was as big as 80%. If fewer people begin to accept Bitcoin as a currency, these digital units may lose value and could become worthless. Indeed, there was speculation that the Bitcoin bubble had burst when the price declined from its all-time high during the cryptocurrency rush in late 2017 and early 2018. There is already plenty of competition, and although Bitcoin has a huge lead over the hundreds of other digital currencies that have sprung up because of its brand recognition and venture capital money, a technological breakthrough in the form of a better virtual coin is always a threat. Okay guys, I hope you are enjoying the video. Don't forget to mention your idea on below comment section.